19th March 26 was a key date for Japan. If you're a global payments, blockchain, or stablecoin executive, on the same day, two landmark documents dropped. A strategic vision from the Japanese bank's payment clearing network, Zengin-Net, on its next generation of payment system, and a comprehensive report from the Japanese Bankers Association on the medium to long-term role of the banks. Taken together, they are effectively Japan's blueprint for how the world's fourth-largest economy plans to integrate tokenized assets, stablecoins, and real-time cross-border payments into its core financial planning by 2030. If you miss what's in these reports, you'll miss how Japanese banks plan to connect to your rails and where the capital is going over the next 4 years. Welcome to Japan Digital Asset Weekly, episode 75. I'm Keisuke of Wakyodo and venture partner at Onigiri Capital. In the next 5 minutes, we are breaking down these two reports into the concrete implications for a product roadmap and fundraising strategy. Zengin-Net is planning a transition away from the legacy Zengin system to a modern fast payment system, targeting launch around 2030. The vision is clear: 24/7 real-time settlement, an API-first architecture, and full alignment with global standards like ISO 20022 so that Japan's domestic rails can interoperate with other fast payment systems. For the digital assets and the stablecoin world, three elements stand out. First, explicit accommodation of stablecoins and tokenized deposits. Zengin-Net openly acknowledges the rise of stablecoins and tokenized deposits in its section on new technologies. It says the core FPS itself will not issue, circulate, or redeem stablecoins. Instead, it'll be built API first so that external stablecoin platforms can plug in cleanly. In practice, that means Japan's interbank infrastructure is being designed as the fiat leg of stablecoin activity, the on-ramp and off-ramp layer. If you run stablecoin issuance, redemption, or treasury infrastructure, this is a signal that the domestic rails are being rebuilt to talk to you. On tokenized deposits, digital money issued by commercial banks, Zengin-Net recognizes that as more banks experiment, a shared infrastructure will be needed for interoperability. The new FPS will be architected to handle messaging and settlement for these bank-issued digital instruments, rather than leaving each bank to solve it in isolation. Second, global interoperability and cross-border payments. Japan is committing to ISO 20022 and explicitly positioning the new FPS to connect with overseas systems. The report calls out BIS initiatives like Project Nexus as reference points for cross-border FPS interlinking for global real-time payment providers and blockchain-based bridges. That means Japan no longer wants its domestic rails to be a closed, idiosyncratic format. Instead, it wants to be part of a network of fast payment systems that can clear and settle cross-border flows in near real time. Third, modernized settlement mechanics and procurement opportunities. To support 24/7 real-time payments and reduce counterparty risk, Zengin-Net is exploring a move away from designated timeless settlement for retail payments toward a prefunded RTGS time model. From a digital asset perspective, this matters because you cannot have true atomic settlement between on-chain assets and fiat if the fiat side is batch-based and credit-dependent. The more Japan's retail rails move toward prefunded, real-time settlement, the easier it becomes to build genuine risk-reduced bridges between bank money and tokenized assets. Zengin-Net also plans to issue RFIs and RFPs starting this year. That creates a concrete window for global vendors that can deliver hardware-resilient, cloud-native, API-driven payment engines to become part of Japan's next-generation core. If you're finding this useful and you work on payments or digital assets, hit subscribe so you don't miss the next reality and infrastructure updates out of Japan. While Zengin-Net is rebuilding the plumbing, the Japanese Bankers Association is asking banks to rethink how they actually take risk and allocate capital. Japan faces a familiar problem: a mature, low-growth domestic market, but massive capital needs in areas like green transformation, digital transformation, and startup scaling. The JBA's message is that the traditional senior loan against collateral model is no longer enough, from senior loans to mezzanine and equity. The report explicitly says that Japan's conservative, collateral-heavy risk culture has to change. Banks are urged to develop deeper risk profiling capabilities and to actively supply mezzanine and equity capital, not just save senior debt. For the global digital asset sector, this is a quiet but powerful green light. Japanese banks are being encouraged to behave more like venture capital and private equity platforms in selected areas. Over time, that could translate into more direct equity stakes in blockchain infrastructure providers, tokenization platforms, and data and risk management layers that support digital assets. Toward a general holding company model. To make this shift operationally possible, the JBA advocates aggressive deregulation. One of the most striking ideas in the report is a move from the current bank holding company regime toward a broader general holding company structure. Under general holding company, banking groups would have more room to expand non-financial businesses and equity investments without being constrained by traditional risk weight and balance sheet rules in every case. If implemented, this would make it much easier for Japanese megabanks to acquire, incubate, or partner with crypto-native and fintech firms globally, using structures that are more flexible than pure bank subsidiaries. Embracing the digital asset megatrend, importantly, the JBA does not treat digital assets as a side note. It explicitly points to tokenization of existing assets, potential CBDCs, and the spread of stablecoins as forces that will reshape money flows and credit creation. The recommendation is not to resist these changes, but to use them. Banks are urged to build digitalization and tokenization as tools to strengthen their intermediation role, utilizing digital technologies and AI to transform business models and support the restructuring of corporate supply chains. Read together, the Zengin-Net and JBA reports mark the end of Japan's wait-and-see stance on next-generation finance. On one side, the core payment rails are being redesigned to be real-time, API-first, ISO 20022 native, and open to stablecoins and tokenized deposits. On the other, banks are being encouraged to move up the risk curve, take more equity and measuring exposure, and reorganize under structures that make it easier to invest in and partner with technology companies. For overseas blockchain, payments, and digital asset infrastructure teams, the signal is straightforward. The technical interfaces into Japan's banking system are about to become more familiar and more interoperable. The appetite and regulatory room for banks to take equity risk in your category is being deliberately expanded. Procurement cycles for next-generation core payment infrastructure are starting as early as 2036. In other words, the window to establish strategic partnerships, position your infrastructure, and secure capital from Japanese financial institutions is opening now. The race to help build Japan's 2030 financial ecosystem has quietly begun, and these two documents are your first roadmap. As your strategic partner for Japan's regulated digital assets, Wakyodo bridge the gap between global innovation and Japanese compliance. Whether you are looking to enter the Japanese market, provide infrastructure solutions, or build institutional partnerships, we manage the complexity so you can focus on growth. If you're responsible for APAC or Japan strategy at the payments, blockchain, or digital asset firm, visit Wakyodo's website to set up an initial discussion. That's all for episode 75 of Japan Digital Asset Weekly. If you found this episode helpful, please like, subscribe, and share. Thanks for watching, and see you next Monday.